Welcome back, everyone. It's Mark Montfort here, coming to you. I'm actually live. I'm not in the office where people usually see me. I'm at a conference, but we are busy spreading the good word of emerging tech, blockchain, AI, etc. And I'm really excited for today's episode because we've got a special guest who I've spoken to many times in the past on other podcasts. Great to have him on here, although he is not the first Fireblocks representative to join us. Verner, how's it going?
Fabulous, mate. How are you? Excited.
I'm very well. I'm excited. Yeah, it really is. I love a good conversation, as you know. And before we, get into it, just because we do have the token, etc., I do need to say that this AMA is for informational purposes only. Redbelly Network is a blockchain infrastructure provider and does not endorse or promote any financial products or investment opportunities. All opinions expressed are those of the speakers. Please do your own research and comply with applicable laws in your jurisdiction. Love it.
You've said that before. Well done.
I have. I've got it written down here too. But Shane, mate, you and I, we go way back from, us getting involved in the DeFi and blockchain space, running the association, doing events with yourself, with your esteemed CEO, Michael Sharlov, who came down here and did a tour with us in Sydney and Melbourne, which was fantastic. And you're esteemed now yourself, I hear, just before this call, folks. Shane, and you now have a new title or something. What's going on there?
Are you talking about Japan and Korea? Yeah, I've been...
Oh, I'm talking Swinburne, actually.
I see. Yes, mate. This morning I was a guest lecturer at Swinburne University to for their Masters of Finance cohort. So a bunch of very smart individuals. It's kind of like an Ask Me Anything, not entirely dissimilar to this, but started off with a fireside chat with Professor Demetrios, who was kind enough to invite me along. So it's kind of my happy place, mate. I had a ball. It was a lot of fun.
Love to see it. When can we call you Professor V?
From here on in, I'll be profoundly disappointed if you don't, and a little bit disrespected.
Yep, rightfully so. Next time you fly, when you choose your title, I don't know if they let you choose Professor. Try. I know there's Doctor. We have to. But that's fantastic, and I think it just speaks to the good work that you do in the blockchain space. Because not only do you work Fireblocks and advocate for that, and the work that's being done there, and actually help bring in a lot of great implementations, but it's the extra stuff as well that people don't often see, and I think that it's important to help that next generation. So hopefully this podcast is part of that sharing, really. But last time we spoke with someone from Fireblocks, it was pre-Project Acacia announcement. Oh, yeah. We had a chat with your colleague Nick Crofts earlier, and for those that are new to Fireblocks, perhaps just that they might be just joining new to the Redbelly ecosystem and are watching this. What's the quick elevator pitch on what Fireblocks does?
People refer to us, I think, more and more as the AWS for crypto. We're that infrastructure layer. Think of us as the plumbers for institutional digital asset operations. So we've got our MPC wallets, our policy engine, the Fireblocks network that empower all digital asset businesses, from the exchanges to the funds to the banks to the prop traders, stablecoin issuers, payments companies increasingly, TradFi treasuries increasingly. We're about safely and efficiently, and most importantly, securely custodying, transferring, paying, trading, and tokenizing on-chain. So we've got some 2,500 institutional clients now globally, about 130 digital asset institutions rely on us in Australia. We've securely transferred, I love this number, more than $10 trillion US worth of digital assets across that Fireblocks network I mentioned, across 100 blockchains, more than 100 blockchains, in fact, including the Redbelly network, which we're very proud of, and some 350 million wallets. The number I'm most proud of, mate, is 15% of all daily digital asset transactions happen on the Fireblocks network. It's a few.
That's it just I don't know what the math is. I don't have the figures in front of me, but if you're looking at like daily volume and just multiply that by 15%, go ahead and do it now on your favorite aggregator, folks. That's
a
a
couple of bucks.
ton. It's a couple bucks that is being supported. And, it's interesting, like the whole kind of TradFi space where many of us come from, and going into blockchain, people always wonder, well, does it have these rails? Does it have this? And it's like, well, it doesn't have these things just yet. But in terms of one of the biggest things that blockchain has that quickly catches up and it presses a lot of people that are our ex-colleagues and folks that are, in that traditional finance space is just the sheer size and how quickly it has come about. So very well done to you guys. Since the chat that we had last time, there's been a lot happening. New features, integrations and more work there. And of course, the selection in Project Acacia. But for you, what have been the highlights of the last, say, month or two?
I was asked this question earlier today. I guess going back to the US election, the election of the Republican Party has created a huge fillip for digital asset adoption in the United States. And there's all that notion of, the Americans catch a cold and we sneeze. And there's certainly evidence of that there. Stablecoin adoption and usage has just exploded. Those numbers I mentioned before about the Fireblocks network, 50% of everything transferred across the Fireblocks network is now stablecoin. So the use cases leveraging stablecoins are coming out of the woodwork. The groundswell of adoption of regulation around certainly the Western world. Australia's lagging a little bit there, but we don't need to litigate that point yet. There still seems, you and I were at the DECA conference, what's that, 2 months ago on the Gold Coast. There's a lot of encouraging signs there as well that we might see some legislation late this year or early 2026. So that's exciting. And just the pump across the traditional assets, Bitcoin in particular, and all the noises in the market about it starting to be altcoin season. We've heard them before, but there seems to be some evidence to support that as well. So lots of really positive signs in the ecosystem at the moment, mate. And when you and I think about where we were 2.5 years ago, deep in the crypto winter on the back of Bankman-Fried and FTX and other disasters, it's much more pleasant sitting here now, and we've got some concrete under our feet, and our chins are up and our shoulders are back.
Literally right for me right now as well, as I recline a little bit here. But you're absolutely right, and it's really interesting remembering where things were in that kind of winter time. Like we all huddled together, so we kept each other warm.
Some of us didn't make it, mate, though. Some of us got a tent.
Their sacrifice will be remembered, as I say. But the interesting thing is where we're at now, and it is that contrast that really just sells how not just the perseverance, because perseverance without actual quality would mean nothing. You wouldn't really be here, but it's the quality that it really has shone through. And we still have things to clean up. There's always that, and it's in every industry. I'm at a health conference right now, and there's a whole lot of things in the health space that also need cleanup. We are constantly making things better with the tech, and blockchain certainly opens up a lot there. And speaking of projects, Project Acacia, the big announcement many people had waited on, many people had spoken about. We were excited with all the work that was going on behind the scenes, had to wait until there were announcements officially, but glad to be part of it. Redbelly, and you guys even highlighted it in press releases that the first time a public blockchain has been part of something as a test by a central bank. So yourselves, what I do at Not Centralized with my colleague Arturo, who's been on this show, selected as one of the use cases for tokenized asset settlement with CBDCs, stablecoins, and deposit tokens. What are your can you talk us through the pilot stuff that you're working on with us, testing? What makes it different from remember the last time there was the RBA pilot, they did the project, the CBDC project, and there were less tests. People don't realize that there's 24 tests now. There was only 14 last time. So not only are they higher in quality, but they're getting more. But what are your thoughts on that?
Yeah, I guess taking a step back, Project Acacia is an initiative out of the Reserve Bank of Australia and the Digital Finance Cooperative. The first time around, phase one, you and I are involved again there as well. That was a pilot central bank digital currency program of work where the CBDC was issued as a standalone pilot on a platform that was controlled entirely by the RBA and the DFCRC in very much a ring-fenced environment. In contrast, Project Acacia now is open to testing the issuance of pilot CBDCs directly onto third-party tokenized asset platforms. And that's a range of private and public commissioned blockchains. Yeah, we've got Redbelly, of course, why we're here today. But Hedera is there, R3 is there, Canvas Connect is there.
Yeah, and the L2.
Yeah, the L2 that they've developed, and there's other EVM compatible networks. So I think the approach is in response to industry interest, exploring deploying a CBDC or a stablecoin directly onto external platforms. We've got 24 use cases, 19 that are going to involve real money and real asset transactions. And the rest are sort of POC simulated on paper transactions, if I understand it correctly. The key areas of focus include that pilot wholesale CBDC, bank deposit tokens, new applications of banks' existing ESAs, exchange settlement accounts. And they sort of span diverse asset classes too, from fixed income, private markets, trade receivables, there's carbon credits there, and other RWA tokenization programs of work.
It's going to be really exciting when they announced DFCRC last time. They had a page where here are the 14 use cases and details about them. And eventually there were even videos from each of the pilot participants after the whole thing was done, like what was the experience like. And that was, it went from Project Atom being a closed, selected group of lawyers, consultants, banks, etc., small group, not public, to the public version in 2023 we got to participate in our first big foray into this space, and now this much more mature one. It's a very interesting story, just I guess like what we mentioned earlier, the maturation of the markets going from the winter like excitement to winter to survival, and now we're at a point where we actually get to enter the thriving area. I think it's really interesting, and it's a shame that others weren't able to be there. But with something like this, the excitement was really interesting. That I think there's a lot of unlocks with something like this. But for you, the question I'm the one interviewing you. I feel like I'm rambling here. I'm sorry, but like, what do you think this unlocks in terms of Australia's capital markets, and does composability across different forms of money matter?
I can't remember who spoke. One of the first morning keynotes at the DECA conference, the Digital Economy Conference up in the Gold Coast a couple of months ago, he spoke about research that was just released exactly on this topic. I can't remember his name. I'm sorry. He talked about the economic gains. I made notes. The potential economic gains, if this data is to be believed and supported, suggests 19 billion per year in markets and cross-border payments, with transaction cost savings from tokenization between, I know it's a little bit rubbery, but between 1 and 4 billion per year, and total annual savings of 13 billions per year for issuers in Australian capital markets. So, they're not the biggest numbers in the world, but they'll do as a starting point. So profound savings in time and costs, real costs to issuers in Australian capital markets. There's also that enhanced efficiency. I can't speak for it all of a sudden. So there's efficiency and risk. Tokenization can significantly increase the time it takes to settle, while reducing the risk in the issuance, trading, clearing, settlement, and the servicing of these assets. So you're driving down counterparty exposure and collateral costs through that atomic exchange and getting rid of the lag, and you can do all this because you're leveraging tokenized money and assets on the same ledger. So it's not. Can you remember his name, by the way? It's a not inconsiderable.
Yeah. It was Talis. Talis, who's just recently been announced as the co-CEO of the DFCRC, and that was research they did with OKX and with DECA, the Digital Economy Council. So the triumvirate there coming together. Talis presented that. Yeah, and he did it in Canberra recently as well when I was down there. So it's right, that 19 billion, you were spot on, because it was such a significant figure. It's, and it's just the start. So imagine what more, when we get really rolling, and blockchain is just pervasive across the ecosystem.
A little bit awkward that I forgot Talis's name, mate. We need to edit that out in post.
I won't tell him, but we do need to get him on as a guest. Okay. So he may have a nice little message for you.
Yeah.
He might. As long as he remembers Prof, I think we'll be okay. But
I remember the numbers.
Yeah. Oh, exactly. The message was the most powerful thing, which I think is a real. I'd be honored at that you remembered the key message there rather than my name. So I think it's okay.
Well, I had to go and dig up the report.
Absolutely. I think that there's a lot of people that need to see that, and it is available. But in the press release, just going back to Acacia, Fireblocks called out Redbelly as the only public blockchain selector. We mentioned some of the other ones there. From your lens, just interactions, you interact with so many, but what makes Redbelly a good fit in your mind for projects, not just like the RBS CBD, sorry, the Acacia work, but just ongoing, where it's like wholesale use cases? What do you think makes Redbelly a good fit?
Well, when you've at Fireblocks and in the Aussie team, thinking about participating is not a no-brainer, really. We are careful about deploying our resources and our time, and there's an opportunity cost when you participate in programs of work like this. It's quite a heavy lift, and so when we did, we thought, well, who do we want to partner with? And that conversation leads pretty much, it has to lead straight away to a blockchain. And I'm sort of proud, as many of us are, to be associated with Redbelly, because it's an Aussie story. It's a little bit parochial of me, I guess, but it's a real homegrown story out of the University of New South Wales. And so when we thought we were going to participate, and one of the first calls I made was to Alan, the MD, but we didn't do it entirely on knowing a bloke, and Redbelly are natively integrated into the Fireblocks network, so that makes the choice easy as well. But there's a bunch of technical reasons and good common sense reasons why we should pursue that as well. There's that technical compatibility. The use case requires the CBDC to be made available on a ERC20 smart contract and a permissioned EVM blockchain, and Redbelly, of course, fits that specification. There's that, because they're natively integrated, there's that existing connectivity and ease of engagement, not just for us, but for our clients that are also existing on the Fireblocks network. That pre-existing integration streamlines the process for all participants and ensures security. The Redbelly network is where the digital bond will be issued and where the delivery versus payment contract for swapping assets will be housed, and they're perfect for that. But you think of the key reasons, like the real fundamental things: it's security, it's the resilience that it offers, it's the programmability, and the easy whitelisting, and that going back to that ecosystem that's already existing on Fireblocks that supports and integrates natively into Redbelly. And then, of course, you've got compliance and the secure wallets as well. So I think they're the fundamental things that made the decision so very, very interesting. But, I'm in Melbourne. Yeah. Redbelly's in Melbourne. It's easy to, also incredibly easy to do.
Yeah, absolutely. It's very easy to just get on the phone and have a catch up when everyone's in town, of course. the project itself, like not just like what we're doing, but overall, there's unlocks that happen here. Arturo talks about them as reference use cases, as in now that these things will be done, it's easier as a reference use case to then go out and actually turn these into commercial projects and stuff. But what do you see from this yourself? What's your point of view on that? Do you think this unlocks a whole bunch of like different use cases from completing, Project Acacia?
I mean, we've gone so for Redbelly themselves, what does it unlock? Is that the question? Because
Redbelly and in general, I guess, yeah, from being part of Project Acacia, because all participants will benefit. Obviously, we are biased towards, how does it benefit Redbelly, but yeah, what are your thoughts just in general, I guess, in terms of what a Project Acacia sort of being unlocks?
I think it gives all of the participants exposure into the institutional capital market participants that digital assets represents a business opportunity that they can't afford to turn their back on. Traditional finance adoption in throughout Australia has been somewhat limited to pilots and POCs, with some very few but vocal participants that are making real money out of the ecosystem, and while they're doing so, they're solving real business pain. I think this very public pilot will grab the attention of, I think, the vast majority of the enterprise traditional finance sector. And once regulation comes in behind the eventual findings of Project Acacia, they'll be free, willing, and excited to participate. So I think eventually it's going to be the ticket to the dance, mate. It's going to really open the floodgates of traditional finance adoption of particularly stablecoins. Now, whether the CBDC itself, the wholesale CBDC proposed itself, takes off in the short term, I think is secondary to the wide-scale adoption that we will see on the back of this program and regulation being implemented.
I think that's a great point. And you mentioned like the ticket. Arturo talked about this in this and in other shows as kind of like being at the Olympics. Like you've had to do all this work to get to the point where you're selected to represent at the Olympics, but now you've actually got to perform. And the stuff that comes post that is all these people now are interested in these sports that we're bringing to life in this showcase that, it opens up doors to business opportunities, as you mentioned. So really interesting stuff. And you mentioned stablecoins there. I wanted to dive into that next. Now, you guys have done some interesting reports on stablecoins. You recently shared something about their usage, and the key stat was that speed, for me anyway, speed, not cost, is now the top priority for institutions and banks. Could you elaborate on that more from that great report that Fireblocks put out?
Yeah, so speed of settlement is by far the number one driver for stablecoin adoption. And it overtook cost efficiency, because that's not our first report. We did one a couple of years ago, and cost efficiency. So it's going to save us some money. The shift's being driven by a few key factors: real-time treasury management requirements, cross-border settlement pressure. There's a gross unwillingness to continue to tolerate 2+2. Growing demand for on-chain instant finality, and that instant finality brings a real cost efficiency along with it. And most importantly, and we've mentioned this a little bit before, but the shift is being driven by regulatory clarity, MICA, US Fed guidance, others around the world, which makes stablecoins viable for core finance infrastructure.
Great to hear. And it is adapting to those, changing environmental variables that has led us to this space. But just going back to your earlier point, we had to be involved. We have to have the infrastructure just ready at any point in time. this kind of stuff happens. And does it match what you're?
Sorry, it's just that speed thing. We also see, speed requirements across sort of non-traditional geographies. Doesn't matter where you are. There's third world demand. It's a clumsy sort of outdated term, but developing countries demand that we're seeing for settlement that's less costly and instant, right? Can we settle in seconds? Can we settle 24/7? Do we have to wait for the bank to open? Can we settle across multiple geographies? So we want instant mint, redeem, cross-border forex exchange, those sorts of things. That's coming up more and more and driving use cases and driving adoption. Security is so critical too. How do we ensure no fraud or misrouting when moving $100 million? That's just critical. And these are the volumes that you're going to be dealing with. So security is at the heart of everything. Sorry, go on. I just wanted to make those couple of points.
No, you're absolutely right. This is not a vacuum, and it's certainly not. It's more like the one measure to represent the whole thing. There's nuance to it. It depends on geography, and like even then, things are important in these different geographies and market types. We see it with TVL. TVL is like a common measure for the successfulness of an RWA project, but it's hardly the only measure. There's so much more. It's like judging market cap as like what's a good company, and that really isn't the best measure.
No.
So it's interesting to highlight.
Yeah, look, and we're going to see a great influx on the back of Acacia with other organizations experimenting with tokenized money, and trying out use cases around forex settlement between banks in real time and retail flows getting settled instantly without card rails. What tokenized treasuries issues and redeeming and rebalancing across protocols really looks like for them, and the cost efficiencies and savings that they can realize out of it.
I think that there's certainly some room for more, for people to dig into all of these like great insights and research that's come from a lot of experience that I know that you guys have, as well as various surveys. And we mentioned research before by Talos that's shown us this 19 billion, DFCSB and the others, and Deca and OKX, and research on stablecoins here. It's piecing all these things together and going, okay, what's the pathway? More and more, we see it as like really beneficial to the offering that Redbelly has. But going back to the point there around, the whole security thing, you mentioned that before. I think security is a very important point, and something that I think you guys have been vocal about from discussions in the past is that idea of thinking like a hacker. And the origins, we heard from Nick in the previous episode about how this had started, the whole kind of Fireblocks thing to mitigate the problems that were being seen there. That prevention starts from day one, really, that thinking like a hacker thing. And as more traditional instos come into tokenization, right, and on-chain finance, let's call it that, what do you think are, like, in terms of risk, what do you think are some of the most overlooked risks that people need to be aware of right now?
Yeah, that thinking like a hacker is a nice little tagline. But Fireblocks exists because of a hack. You'll remember 2017 when the North Korean state-sanctioned hacking group, the Lazarus Group, who's still very active today, and in fact responsible for the Bybit hack a couple of months ago that stole $1.5 billion. So when the Lazarus Group hacked two South Korean crypto exchanges and got away with $200 million, our three founders were called in. They were at Checkpoint at the time, and they were called in to provide forensic audit services into that hack. And while they were there, they worked out how to secure wallets on the blockchain. And a few years later, here we are. But your question was overlooked risks. We've been really vocal about that principle of thinking like a hacker, and that prevention needs to be part of architecture, not just response. Architecture, not just response. So as TradFi institutions enter tokenization and on-chain finance, risks are evolving and will continue to evolve. And many of these risks are consistently overlooked and many of them misunderstood. One of the most common blind spots we see is blast radius mismanagement. So think of an institution. They they can underestimate how broadly a failure can cascade, whether through things like token permissions, vault misconfigurations, protocol interdependence. So, a single compromised vault or a single compromised token admin could trigger cross-chain exposure. That could trigger forced liquidations. It could trigger a regulatory breach, and then you're in real problems and a world of hurt. And our take is the conversation at the start has to include blast radius mapping. What assets, what users, which systems can be touched by a compromised role, human or policy? What's going to hurt us there? And how do we contain that? And what you're going to need tooling. You're going to need to build in kill switches. You're going to need to build in containment contracts that can just halt operations without bringing the rest of the business down. So that blast radius mitigation is something that we've seen develop quickly and something that is critical for institutional clients TradFi clients looking to participate in this space to be considering first and foremost.
I think it's a great term for it. It really is that blast.
I wish it was.
Like you. You should. I would have believed it and stuff. I mean, given the esteemedness and professorial duty.
I need a suit and tie before you do that.
I came twice, so I don't think I can get a tie. Maybe Redbelly at $1 or something like that. I'll put the suit and tie on. But speaking of security, do you think that Fireblocks has changed how it talks to clients about things like, say, smart contract permissions on the one side, multi-party governance on the other? And you mentioned blast radius containment. Has the way that you talk to clients evolved over time when it comes to things like this and as the environment changes? Or has it still been the same message, but just with different environments?
Oh, no, it evolves all the time, mate. The essential elements are the same. Traditional finance organizations want to participate in this space, but I'm not going to talk about regulation again. One of the things that holds them back is nobody wants to be on the front page of the Australian Financial Review or the Age or the Sydney Morning Herald because of a hack, because of a security failure, because of fraud. And many of them, rightly or not, see this space as representing that risk. And so they approach this space particularly trepidatiously. I couldn't think of a shorter word, and forgive me for that. But you'd say rightly so. We've locally signed the master services agreement of the major Australian banks and other traditional finance organizations, and that's something I've done in my past lives before I joined crypto. And the level of scrutiny in a crypto-faced organization is way more than double, 300% greater, because you're talking about threat vectors from state actors on infrastructure that is transparent and immutable. So that loss is permanent. Of course, it's evolving. Fireblocks is evolving with it. In the cohort that I spoke with this morning at Swinburne University, one of the students in the Q&A at the end said, what does Fireblocks worry about for the future? And because we're always evolving to different threat vectors. And something that's come up recently is quantum computing. And what does that mean when it's used as a tool by these state actors that are committed to stealing our money? Yeah. So, we're evolving, mate, all the time.
Cannot but evolve, I guess. Working in the emerging tech space, there's always something new, blockchain and AI. I think it's great to hear because we just need to keep going. What was the best in practice yesterday is going to be very different. Today.
We're seeing those off-chain blind spots as well. Like APIs and oracles. You've got to be your tokenization logic might be secure on-chain, but if it's exposed through a weak API, then what's the point? What's the point securing? You're going to be in trouble.
And a lot of faults have not been because of the on-chain. Sure, there has been some, but like the off-chain, like smart contract weaknesses and stuff like that. But like a lot of times it's off-chain. It's like some centralization weakness, not checking properly signatures or like websites for, in the case of like the Bybit kind of stuff and just blindly signing and stuff. So I think we really need to evolve there. But let's say for folks that are coming into this space, more on the innovation and the product side of things, we've seen a lot of builders moving from proof of concept to production lately, especially in tokenization, because apart from stablecoins, tokenization has been a big thing, which will need stablecoins, obviously. But what signals do you look for at an industry level to see that it's ready to scale from test net to real world usage? What do you look for?
What does Fireblocks look for? I think Fireblocks is always looking for inflection signals, indicators that give an industry or an asset class that are signaling that it's maturing beyond that just POC. And moving into a production grade tokenization project. When we see it, we deepen our platform integrations. We build out support for a specific blockchain like Redbelly. We expand its go-to-market alignment with the institutions that are on the Fireblocks network or coming on. So I think we look for a bunch of things. Personally, I'm a business guy rather than a technologist. I like to see a movement from a tech-first use case into a business-first use case. What pain are you solving? Are you bringing down cost? Are you increasing revenue? Are you increasing efficiency? Are you bringing down inefficiencies? Instead of hearing something like, we want to tokenize X on Polygon, I'd much rather hear, we want to digitize a carbon credit. We want to offer a fractionalized REIT, or we want to settle a syndicated loan on chain, because we can see profit in it, we can see efficiency in it, we can see our customers benefited from it, So that tells me that these people are looking for infrastructure that solves a real world business problem and not an experiment. And it's also where we point our turrets, our R&D focus, where we put our product development focus, where we hire in geographies. If there's a movement within a one, say, newly regulated geography, like Tokyo, for example, like Japan, I should say, for example, that's a key indicator. Another one is a real demand for compliance and not just speed. So a use case that demands regulated transfer policy or some form of permissioned process, some sort of identity integration, some auditability. If it's about compliance, it talks to me that this is a product that's going to get integrated into a legacy tech stack and be a product that's going to offer to their clients that they're going to profit from and that their clients are going to profit from. So that sort of thing, is a leading indicator for me, and I think for Fireblocks.
I think it's interesting what you highlighted there at the start. Like, it's more of that. It's less on the tech talk and it's more on the features, the benefits, like what's the business outcomes. We used to talk about it like in my past sales days. Well, I haven't really taken that hat off, but still, it's that revenue increase, the cost decrease, but it was also like, and where I think you guys play a strong part in is the reduction of risk. Like workflow efficiencies and various other things like that. Reduction of risk is like a highly important one, depending on the time. Sometimes risk is the most important thing, depending on the season. Sometimes it's reducing costs. And hopefully we're in time soon where it's more about increasing revenue, but I think it's very important there. Do you think that there's like tooling that might be, let's call it missing? So institutions, when you think about the tooling that's there for them, what do you think still needs to be built to really push this along?
Look, I think the tokenization of real world assets on the likes of Redbelly is inevitable, but it's not yet frictionless, is it? There's still a fair bit of friction there. So I think from our vantage point, being fortunate enough to have nearly 2,500 institutional clients on the Fireblocks network. The biggest blockers aren't vision, they're not willingness, they're not money. I think there's missing tooling that spans regulation. I know we've said that a lot. Compliance, operational infrastructure, integration into legacy tech stacks, lifecycle management. We'd love to see, we'd love to see a program of work that has embedded compliance and transfer controls, but we don't think they're robust yet, and we know there's no off-the-shelf frameworks yet. Imagine a compliance as a service SDK that could plug into your token contract. Imagine verifiable credentials and ZK compliance proofs and regulatory rule sets all built in. And of course, we are a secure wallet provider. At the token level, we have a policy engine that supports many of these things, but many of them are developing at a product level. So, there's still some tooling missing, and still some tooling that needs to be developed, mate.
I think that we will get there because demand for it will push it forward. It's a kind of collective
Off you go
sort of thing. You mentioned the conversation. I just wanted to highlight as well that we're seeing that. I know Arturo has with Tim and others, when they've had the conversation more about the business outcomes, the businesses that they are working with and signing up, and more to be signed up that will be announced, it's far better. It's not just the tech for the sake of tech, and I think that's a differentiating factor that for Redbelly Conversations is making a clear difference, and as well for others. So it's great that you highlight that, because I think the community needs to know this is not just talking about tech for the sake of it. We're actually trying to get stuff done.
Yeah.
So really, really interesting to highlight there. Next on the agenda was really what's next for Fireblocks around let's maybe global, or maybe you only want to talk about the APAC side of things, but what could you say, what can you say on this show about what you see are coming next that we should look out for from Fireblocks?
Every 3 months at the end of every quarter, we do, like most technology business, a quarterly business review. And 4 years ago when I started, the quarterly business review cycle hadn't yet started. So the first one, I think, was in January 2022. And there was a couple of handfuls of people in the office in Singapore. Singapore's the APAC hub, obviously enough. I don't know how many people were in there in July. 100. We're a really big team now. We're expanding. I'm looking for a rep in Korea, and I put out that post on LinkedIn this morning, mate. Please like and share. And if you know a really good Korean enterprise seller, give me a yell. We've launched a Tokyo office, and we are hiring in Japan aggressively. I think we've got 12 people there now. 2 years ago, we had no one. We're expanding in Korea. Singapore client base. Singapore is servicing, I think, 350 clients across APAC, with offices in Korea, in Japan, in Singapore, in Hong Kong. There's 20 of us in Melbourne. We've got an office in Sydney. We're hyperscale organization, right? It's really exciting. We've got the strategic partnership in Project Acacia. The Redbelly integration was a meaningful step because it is Australian-built blockchain. The SMBC Japan stablecoin initiative, which is a JPY peg stablecoin pilot using Fireblocks and Avalanche, which is targeted for launch later this year. In early 2026, they're going to go into cross-border payments, and that's really exciting. We're expanding off exchange, which is our product that eliminates counterparty risk and end of day settlement, promotes end of day settlement for crypto exchanges. It's a very specific product that we used to only offer on Deribit and Bybit, has now expanded to so many more different exchanges, and that's being wildly successful, mate. So huge product developments, huge personnel developments, particularly around APAC. But this is only going to accelerate on the back of the tectonic shift in digital asset adoption being led by the United States at the moment. And I'm not quite sure whether I've got my head around it completely yet. Things are moving so quickly there. What does the Genius Act mean? What does the SEC's posture really mean at an institutional level? And what does that mean for TradFi growth here in Australia and crypto growth here in Australia?
Yeah, there's a lot to unpack there as to, is it just is it actual flows of money coming through and doors are now fully opening, or is it more examples to then convince, as we are trying to look at here, regulation, many things that it could mean across the board there, open to interpretation. I think if anyone's going to interpret it well, it's the group that's taking care of 15% of the daily transactions out there. If you guys don't, then yeah, what hope do we have? I'm joking. We have much professorial kind of like leverage here in the room. But I just wanted to highlight, for the devs out there, this is not something where you just have to watch Redbelly do things at this level. Fireblocks work with Redbelly, not centralized, others. There are many things. If you're startup, you've got ideas. We like to see that people actually talk to groups like yours early.
Yes, so do we.
Right? That it's not just that.
Yeah. If you've got
exactly. So you can help steer the right direction.
If you've got a B2C idea,
yeah,
I'm sorry to interrupt you. If you've got a B2C idea, we want to hear from
I don't know.
Right? Yeah. We've got any number of tools, free sandboxes, a free developers hub, a sandbox, Redbelly pilots are also available. We've got full API docs, SDK docs, guide for EVM smart contract interaction. There's API quick start available on our website, but we just want to hear from you. And on Redbelly developers, you can begin testing custody, minting, DVP flows directly through a Fireblocks sandbox API while using Redbelly's permissioned EVM stack. Okay, so it's there for you if you want it, and we urge you to take advantage of it.
Yeah. Well, that's exactly what I was going to ask, and you've dived into it, which is great because it's those sorts of things. Like I work a lot in the AI space as well, as you may know, and similarities across blockchain. Blockchain teaches AI a lot, and we can learn a lot from them. But one of the key factors is being ease of use. And when it comes to developing, sure, OpenAI came out with some large language models, but there were barriers of entry because people could only do stuff with ChatGPT. Then they made APIs available very early on, but it wasn't until there were tooling available that it opened up the floodgates to many more. So when there's APIs, it's only developers that can really do stuff, and people that were persistent enough to go back and forth with ChatGPT to figure it out or to read documentation quickly. But then tools became available to make it easier. Support became more available. There was widespread knowledge sharing. I see the same sort of thing with what you guys are providing there, because a lot of people will hear this and go, oh, but I'm not a dev. You have all of these toolings available that if you've got an idea, you have to start with an idea and it can actually become something. Have you got any stories where, don't have to name names, but where people have just come with an idea, and what has that kind of led to? What could a pathway be where, they want to do something B2C, like you said, with Fireblocks?
Without sort of talking about specific use cases, a few years ago, the barrier to entry, say 4 years ago when we were at the peak of the crypto bull run, the barrier to entry to build on Fireblocks was quite high. Demand was such that if you didn't have 40 grand per year, we probably couldn't talk to you because we were servicing institutional clients at a pace never before seen. Everything blew up in April, May 2022. And so we had to change our go-to-market posture. And that's where we not just changed our pricing model, but changed our focus into the developers, into the builders, offering the sandbox and the APIs and the blogs and the SDKs and everything else. Get started, build something there. Get develop product market fit without breaking the bank and without quitting your day job. And once you're there, then come and talk to us about a meaningful enterprise deployment. And that's really been the journey. We've seen, Nick and I did the numbers at the start of the year. I think we've had about 500 conversations, different individual conversations over the last 4 years. And not all of them took off, obviously, and those that did, not all of them survived. But that's a hell of a lot of builders that we've spoken to across pretty much every use case that you can think of. Some fabulous, some I still don't understand. You know, some that are.
I think that it's always interesting to see these things where it's like, look, it might not be in our kind of I don't deal with that sort of stuff day to day. I don't really quite understand it, but there's always interesting insights you see from all these different ideas and applications of the tech, and you don't want to stop any of them. There could actually be learnings that come from that in various kind of ways. But I think that, you know, people will learn a lot from, you know, seeing this episode, seeing all the links out there, and more importantly, just getting hands on it and getting involved. And people want to reach out and discuss more of this because they've got ideas. They want to chat with you. They want to chat with the team. Where's the best way for them to
hit me up on LinkedIn? I think I'm the only Shane Verner that works at Fireblocks. Request a demo on the fireblocks.com website. Easy. They're the best ways.
Fantastic. Well, we'll put those in the show notes, and really appreciate and thank you so much for your time there, Shane. We'll have to get back on the show again soon, but yeah, thank you so much, and I'll see you soon.
Yeah, well.
So mate, if there's anything that you need the Redbelly community to do, there's a lot of passionate folks out here. Just give us a shout, and we'll
likewise, mate. Anything I can do, I'll be delighted to help. Great to